What's good, mentees? Pretty much, this is a requested video. Okay, that's why I wanted to make it. I had to show you an example and how I took this entry. Okay, not the first entry, but the second one, because all them reasons here led to this continuation here. So I wanted to show you how I took this entry. Let's look at what I took. This is the entry I took. You can see. Okay, I'm still holding it. You can see, and I'm not exiting that soon because I expect gold to at least go back below. So that's why I'm still holding it. So let's go to the 1 hour time frame. I always tell you, we start from a higher time frame and then we can look to find entries. Now you can see overnight I sent out the same thing to you guys in WhatsApp, okay, for the private community. I sent out this trade here, okay, and I really trusted this entry to hold price, but you can see price never went back above there. So we're gonna be looking at the reason why price didn't, and that's pretty much it. So let's start with the 2 hour. 2 hour time frame here, we had an imbalance. Okay, this was your sell side liquidity off of this SMT, a sell I took yesterday. So that's why I was waiting for price to come back into the imbalance, and then we can continue with this minor downtrend here. Okay, so since price never came back into my imbalance here, I expected the continuation to be the imbalance. So we got an imbalance on the 2 hour time frame, you can see here, and also we had hidden liquidity here. Okay, we had hidden liquidity here, so I expected a sweep. Okay, and then I tap into my key level, but you can see price never tapped into my key level. So from here I need a more confirmation to take a sell. So from here you can see now, after this hidden liquidity taken out and also price tapping into the imbalance, we got a rejection. And I always tell you, after the rejection we always have to look for a breakout. Where is our breakout? Our breakout is right here. This is your breakout, y'all. This is your breakout. Ain't no way you're telling me this is your breakout. I mean, if you wanted to use this, you can, but at this point this is what I'm teaching y'all. So this right here is your breakout. So after the breakout, what do we see happening? I told you, after price breaks out, you look for a key level that has not been mitigated. Where is the key level that wasn't mitigated already? Is this here, this OC level. Okay, we had an OC level here, so that's why you see price reacted from there. So after that rejection, mind you, this is the same thing. We have an imbalance in between here, but price decided to come and mitigate the OC level, correct? And also we had a CRT low, and then a CRT high, and then a CRT low, right? So let me hold away right here. Okay, now we're gonna refine how to find our entry point. Since you've got a breakout, now let's see on the 30-minute what we got going on. Looking at the 30-minute here, you can see that this OC level was in line with an OB. Okay, you can see was in line with an OB, correct? And also this OB was aligning perfectly with this key level here. This is a failed QML. Okay, that's a failed QML. So this became our key level here. All right, so how did I find my entry? Once more, this after price taps into this OS level, we got a breakout. This was another breakout that showed that price don't want to go back above. It didn't want to go back above to retest them levels, so that's why you see price coming back into this apex. We got a sweep because I told you after breakout, wait for price to come at the apex, and then you enter from there. If there is a QML in between here, you don't have to take a sell in between here if you don't have liquidity protecting the high of that QML. Okay, so now what are we looking at? We see that, okay, price has engulfed to this. We've got a market structure shift, correct? And let's see the 15-minute. 15-minute, this was your market structure shift here. Okay, this was your market structure shift. Now many could have been doing this, like, okay, I have my classic A here, correct, and then I have liquidity, but you can see price never pulled back into that key level, correct? Price never did pull back into that key level, So that means you was waiting at the wrong key level, at the wrong zone. So that means you're gonna miss out on that certain key entry point. So what happened here? This was your apex here, correct? This was your apex, because I told you. Now look here, we have a QML. We have a QML here, but this QML didn't have liquidity, correct? That's why I'm saying always go for the apex, okay? If there is no liquidity, protecting the key level. And then what do we see? After price comes into this key level here, okay, it did sweep, okay? It did give you a sweep. That means this just was a sweep of the sellers who put their stop losses here. And also you got a TS, okay? That's a TS. That's totally, I showed you that price wants to go down and it's just sweeping liquidity side that we can move to sell side. So from here, let's go to a 5 minute time frame. After that sweep, you got another breakout here. This is a valid market structure shift here. Market structure shift. This is a shift, okay? And then we had our key level above here, correct? So you had this last liquidity protecting the key level, right? You had this last liquidity protecting the key level. Now this is why I'm calling this manipulation. Why? Wherever you see price taps into the key level, correct, leaves a huge wick like this, don't expect price to just sell off like here and then it takes out sell side. It can never happen, okay? It can never happen. Always there has to be a rebalance in price such that you can look to entry, take a sell. So from here, I'm getting my gun box from this low, okay, to the high, and then I'm determining my key level. This is my CE level, correct? And then the stop loss should be just above the high, correct? So now, also since this key level was chosen, this key level was in line with a fib retracement key level here, okay? I'm marking from my swing low to the swing high, and then I'm determining my key level off of that, okay? You have to understand market structure. I've already told you guys how to do this. So I don't think anybody's gonna be like asking some bullshit unless you're not a student. So well said. From there, I had to go down to a lower time frame, find a key level that is aligning perfectly with this. But in my mind already, I seen this as manipulation, okay? And then this is just last liquidity, and then price had to tap into this key level. In my experience, this is what I seen over the, okay, yes, I guess this is what I've been seeing. So that's why I'm choosing this as my key level, okay? That's why I'm choosing this as my key level. And you can see after a tap into our key level here, we got a rejection, and then you got this FS, okay? You can see price came back into this fib, okay? Fib, and then it retested. That's where price started selling off. So let's look at the 3 minute. 3 minute here, you can see you had a QML, okay? This QML was in line with NOC, and also the 5 minute, you can see price was in line with an apex. So this apex was aligning perfectly. This is time frame alignment. You can see the 3 minute was aligning perfectly with this QML. This QML already was tapped into already here with this TS here. So price had a reason to react from here because this was aligning perfectly with other time frames. So let's look at the 1 minute. 1 minute is the same thing. You can see the QML was showing itself here, okay? It was valid. It was a valid key entry point. You can see how it's looking like here, and then a tap into this fib retracement, and then we got a sell. So how did I get the continuation though? Because someone asked me yesterday, how do you come up with continuation entries? It's just simple. Since what led to a price breaking out, okay, was an imbalance, you expect continuations to be the imbalance. All right, you expect continuations to be the imbalance. So now we've seen price tap into our key level, and then we get a market structure shift. This was your market structure shift, okay? And then let's look at the 5 minute, such that you can look at a bigger picture of what I'm saying here. You can see this was just an IDUM here. This right here was just an IDUM because we had equal loss here. So the price had to give us a close below such that we can take this as our market structure shift. Now, why am I saying that continuation should be our imbalance, since the key level where price reacted and gave us a breakout was just an imbalance, weak imbalance. Look here. You can see after price coming back into here, right? You got a rejection and then a break of this. So this right here was just your imbalance, and you can see how well price respected that key level, correct? You can see this was your imbalance. Price comes back, taps into the IB, okay? And also why price held on to this is because we had an FVG in between. So this became your internal range, and then you was targeting external range liquidity. So let's look at the 3-minute time frame. Let's see the key level that was aligning perfectly with this imbalance here. You can see now, as we're finding here, there is no way you're gonna tell me that price is gonna come back above there at the apex level. It don't make any sense. This is the key level you got going on here. This is the valid key entry point because it's valid and it's fresh. Okay, this was your key level. You got a fast tap, but price never tapped into the QML, and then a sweep after that imbalance, and then you got another market structure shift here. So how did I get my re-entry here? Because I entered at the re-entry point. First of all, now many might wait for price to do this and come back into this. It don't make any sense. Okay, it don't make any sense. You've already got your market structure shift, and then this is your OB here. Okay, this is your OB. But now let's say this is your key level, this is your apex. You're waiting for price to come back at the apex, correct? Let's see the 3-minute. 3-minute. You can see we had an imbalance. This right here was our imbalance, correct? This means price had already tapped into the CE levels of this imbalance level. So I don't know why you focusing on taking an entry after price coming back at the apex, because now let's say you're refining your entry. That means you're going to refine your entry to this key point level here. Okay, that means this is gonna become your key level here. Okay, and that's wrong. Let's look at the 1 minute, because I took all the confirmations on the 1 minute. You can see now, after price tapping into my imbalance, I went down to a lower time frame, which is the 1 minute, looking for a sniper entry, and then you have another imbalance here. When you mark your imbalance, let's find our CE level. On my fault, hold away. God damn, what was I doing? Shit. From the low to the high. Okay, where is the key level that is aligning perfectly with this imbalance here? Is this QML, and also this RBS. Okay, that's what was in line with this key level here. Okay, always guys, always you shouldn't be focusing on taking only sniper entries. And also this key level had the liquidity. This QML that failed to hold price had liquidity below it. Okay, you can see those equal highs above here. Okay, after price taking that out, this was your QML level, and pretty much that's how I took this sell. Always, you don't necessarily need to take sniper entries. Sometimes you need to take your entry like here. Okay, take your entry here, and then put your stop loss above here. There is no problem in that. No problem. Okay, and then you target to a 1 to 5 or a 1 to 7, because that's what I'm always targeting. Okay, that's what I'm always targeting. So this is how I took my entry. It's just a simple entry point, and pretty much that's about it. And yeah, take care. I'm out. Peace out. Let's go.